Building significant wealth isn't just about earning a high income, it's about making smart investment choices. The super rich know this well, and they leverage a variety of assets to grow and protect their wealth. Today, we'll take a closer look at the top assets that are contributing to the financial success of the super rich, and how you can adopt these strategies to enhance your own financial portfolio. Number 1, real estate. Real estate is one of the most popular and profitable assets for the super rich. Investing in properties can generate substantial income through rent and appreciate over time, increasing in value. The super rich often invest in commercial properties, luxury residences, and rental units in prime locations. For example, owning a luxury apartment complex in a bustling city can provide a steady stream of rental income. Additionally, real estate investments offer tax benefits and the opportunity to leverage properties to obtain loans for further investments. Real estate is also seen as a tangible asset, providing a sense of security and stability. Real estate investments aren't limited to residential and commercial properties. The super rich also invest in land, which can appreciate significantly over time. They might purchase undeveloped land in areas with high growth potential, holding it until the value increases before selling or developing it. Number 2, stocks and equities. Stocks and equities are another key asset for the wealthy. Investing in the stock market allows them to own shares of profitable companies, earning dividends and capital gains. The super rich often diversify their stock portfolios to include a mix of blue-chip stocks, growth stocks, and international equities. For instance, investing in technology giants like Apple or Google can yield significant returns as these companies grow and dominate their industries. Diversification helps mitigate risks and maximizes potential gains over time. Moreover, the stock market offers liquidity, allowing investors to buy and sell shares easily. The super rich also invest in index funds and exchange-traded funds, ETFs, to achieve broad market exposure and reduce risk. These funds track specific indexes, such as the S&P 500, and offer diversification across various sectors and industries, making them a safer investment option. Number 3, private equity and venture capital. Private equity and venture capital involve investing in private companies, often startups or businesses not listed on public stock exchanges. The super rich invest in these assets to gain ownership stakes in companies with high growth potential. These investments can lead to substantial returns if the companies succeed. For example, early investments in companies like Uber or Airbnb have made many investors incredibly wealthy, as these startups grew into global giants. While private equity and venture capital carry higher risks, the rewards can be enormous for those who choose wisely. These investments also allow the wealthy to be involved in innovative and disruptive industries. Additionally, private equity firms often purchase struggling companies, improve their operations, and then sell them at a higher value. This strategy, known as a leveraged buyout, can generate significant profits and contribute to the investor's wealth. Number 4, bonds and fixed income securities. Bonds and fixed income securities provide a stable and predictable income stream, making them a popular asset for the super rich. These investments involve lending money to governments or corporations in exchange for regular interest payments. Bonds are considered safer than stocks and can balance out a more volatile investment portfolio. For example, municipal bonds offer tax-free interest income, making them attractive to wealthy investors seeking to minimize their tax liabilities. Corporate bonds issued by companies often provide higher yields but come with higher risks compared to government bonds. Investing in bonds helps preserve capital while generating income. In addition to traditional bonds, the super rich also invest in other fixed income securities such as Treasury inflation-protected securities, TIPS, and high-yield bonds. These investments provide additional protection against inflation and offer higher returns than standard bonds, respectively. Number 5, art and collectibles. Art and collectibles such as fine art, rare coins, and vintage cars are unique assets that can appreciate significantly over time. The super rich often invest in these items not only for their aesthetic and historical value but also as a means of diversifying their portfolios. For instance, a rare painting by a renowned artist can increase in value exponentially over the years. Art and collectibles also offer a hedge against inflation, as their value tends to rise when the purchasing power of money decreases. Moreover, these assets can be enjoyed personally while they appreciate in value. Collecting rare wines, antique furniture, and other luxury items can also serve as profitable investments. These items often become more valuable over time, especially if they are well preserved and have historical significance. Auctions and private sales are common venues for buying and selling such collectibles. Number 6. Hedge funds. Hedge funds are investment funds that employ various strategies to generate high returns for their investors. The super rich often invest in hedge funds because they offer access to sophisticated investment techniques such as short selling, leverage, and derivatives, which can provide substantial profits. For example, a hedge fund manager might use a combination of strategies to profit from market volatility, earning returns even when the stock market is down. While hedge funds often require a high minimum investment, they can offer significant returns for wealthy investors. These funds are managed by experienced professionals, adding an extra layer of expertise. Hedge funds may also employ global macro strategies, which involve taking large positions in securities based on macroeconomic trends and events. This approach can yield substantial returns if the predictions are accurate, further enhancing the wealth of the investors. Number 7. Real assets. Real assets include investments in physical commodities like gold, silver, and oil, as well as infrastructure such as roads, bridges, and airports. These assets provide a hedge against inflation and can offer substantial returns during times of economic uncertainty. For example, investing in gold can preserve wealth during periods of high inflation or market instability. Similarly, infrastructure investments can generate stable income through government contracts and user fees, making them attractive to the super rich. Real assets are tangible and often have intrinsic value. Agricultural land and timberland are other examples of real assets. These investments can provide income through the sale of crops and timber while appreciating in value over time. The super rich may also invest in renewable energy projects, such as wind farms and solar panels, which offer both financial returns and environmental benefits. Number 8. Private businesses. Owning private businesses is another way the super rich build and maintain their wealth. By investing in or owning businesses, they can directly influence the success and profitability of their investments. This control allows them to implement strategies that maximize returns and ensure long-term growth. For instance, a wealthy individual might invest in a successful family-owned business, providing capital for expansion and modernization. As the business grows, the investor benefits from increased profits and equity value. Owning private businesses also allows for diversification of income sources. Franchises are another avenue for investment. By owning multiple franchise locations of a well-known brand, the super rich can generate consistent income with relatively low risk, given the established business model and brand recognition. Number 9. Cryptocurrencies. Cryptocurrencies like Bitcoin and Ethereum have become increasingly popular among the super rich as a means of diversifying their investment portfolios. These digital assets offer high growth potential, though they come with significant volatility and risk. For instance, early investors in Bitcoin have seen astronomical returns as the value of the cryptocurrency skyrocketed. While the market for cryptocurrencies is still developing, the potential for substantial gains makes them an attractive asset for those willing to take on higher risk. Cryptocurrencies also offer the advantage of decentralization and security. In addition to holding cryptocurrencies, the super rich may invest in blockchain technology companies and cryptocurrency exchanges. These investments provide exposure to the growing digital currency market while potentially offering higher returns through equity stakes in innovative companies. Thank you for watching. Don't forget to like, subscribe, and stay tuned for more insights.